The housing market is experiencing a serious boom right now, but a showdown over real estate fees, who pays them and how, is creating some serious debate and could actually reach the Supreme Court. Joining us now, Mitch Roschelle, founding partner of Macro Trends Advisors and a housing market analyst for more than 30 years. Mitch, it's great to have you. It's good to see you. Let's start with where we are right now, which is in the middle of a pandemic. A lot of people are out of work. One good story, though, how is it that the real estate market is so hot right now in the middle of all this?
Yeah, and it's a great thing right now that we have a pandemic hurting the economy, and there's a bright spot in it, which has been the housing market. I think, Joe, this is a trend that was starting before the pandemic, and it just got hyper accelerated. We have a strong demand for housing, and we have very limited supply, so that's driving prices up. And there's two things that are happening right now. We have people that are moving to the suburbs from cities. We have people that are moving sort of out of high tax states to no or low tax states. So that's creating a lot of demand. We have low interest rates, and we have an increased savings rate in this country, actually $1.4 trillion worth of excess savings over normal trends because people can't go to dinner and a movie. So what are they doing? They're saving. And what are they doing with the savings? They're pumping it into buying that dream house. So it's sort of a perfect storm in a good way. And the housing market is certainly the beneficiary.
And not necessarily where they are. There are a lot of people looking out of state, maybe to look for a new place to work from home. A lot of people have cabin fever, too.
Right. And there's one thing about cabin fever. When you have it, and right now it's cold where you are in Chicago, so there are a lot of folks with cabin fever, they start dreaming about a bigger cabin or in another warmer location. Right now, I live in the Northeast, and I'm in Florida right now. And one of the things I'm doing in my free time when I'm not boating or beaching, looking for a place to buy down here because of the tax situation. So I'm not alone. There's very little inventory on the market, and it's part of the bad side of the story. When there's a boom, there's nothing to buy.
Right. So with the market so hot, Mitch, there are some people who are looking back 10 years ago or so and worrying that maybe there could be a bubble here. You don't think that's the case?
No, this is a boom and not a bubble. I've said it before, and I'll say it again, because the conditions are a lot different. There's a lot of demand for people who want to buy homes and live in them as opposed to invest in them. And the mortgage underwriting standards today are still considerably more stringent than they were 10 years ago. When you could buy a home and borrow more than 100% of the purchase price of the home, that doesn't exist today. People putting real down payments down, they're living in the home. And I think it's just this outsized demand that we have with very limited supply. And it doesn't look like, even though the housing starts have been picking up, it doesn't look like the supply is going to catch up with the demand. So we may see a period of rising prices for quite a while.
What about interest rates?
I'm a believer that they're going to stay low for a while. And all of this, Joe, is fueled by the stimulus that's out there. So it's not only the checks that people are getting for those in need, and some of them who don't need them are using the money and saving it, but it's also the fact that the Fed has been keeping interest rates down and will continue to do so. There's one other thing that they're doing, which is a little in the weeds, but they're buying assets. They're buying over $100 billion worth of bonds, and some of those bonds are mortgage-backed securities. And since they're creating all of this liquidity in the bond market and in the mortgage market, that's serving to keep rates down as well. There's no sign that the Fed's going to turn that policy around. So I think rates are going to be down for a while.
All right. So speaking of the weeds, this one's a little complicated, but let's go there. Talk about the settlement this week involving brokerage fees. For people buying and selling a home, what do they need to know about this, Mitch?
Right. So if you are a buyer of a home, you can hire your own broker. If you're a seller of a home, many people do hire a broker. So there was a settlement between the National Association of Realtors, which is their trade group, and the Department of Justice. There was a litigation, and it was settled. Basically, the upshot is that there's going to be more disclosures and hopefully more transparency around who's paying what. And basically, if you are a buyer and you hire your own broker, it will give you some more transparency about your ability to negotiate your fees, just like the way a seller can negotiate fees. Right now, it's very opaque. There isn't a lot of transparency. And the firms that are sort of not part of that world, the online brokers, they sort of put pressure on the industry to create more transparency. We'll see where it leads. I don't think that the online brokers are thrilled with this settlement. So we may see more civil litigation, and this may, as you said in the open, this could find its way all the way to the U.S. Supreme Court.
All right, Mitch Roschelle, great to have you. Thanks for your time and your expertise. Good luck house hunting.
Thanks, Joe. Nice to see you.